On to more news now. The publicly owned power company that keeps the lights on in Indianapolis, it's about to change hands. It is being acquired by a massive global investment firm, and that means it will no longer be publicly owned.
And that shift has some consumer advocates raising red flags. As Rich Nye tells us, they're worried the focus could move toward profits and away from those of us paying the bills.
AES announced a consortium led by Global Infrastructure Partners, a division of BlackRock, and EQT will acquire AES for $15 a share. That's more than a 40% premium for shareholders. AES Indiana and AES Ohio will remain locally operated and managed regulated utilities. No one with the company here would comment, but a corporate spokesperson sent a statement. This transaction will deliver compelling near-term value to stockholders and better position AES to drive sustained growth across its business units, allowing the company to deliver reliable energy solutions for customers and create long-term value for other stakeholders, including its workforce and local communities. Indiana Congressman Andre Carson issued a statement that included, "I'm very concerned that AES's move toward private ownership will hurt Hoosiers. Private firms having a stake in public utilities and essential service will put profits over people."
Even though the state authorizes AES Indiana to run a regulated monopoly in central Indiana, the state has no say in who acquires AES Indiana.
Citizens Action Coalition says this acquisition is driven by the demand for data centers and the large amount of electricity required to power them.
These monopoly utilities are extremely attractive to these private equity firms simply because of AI data centers and the significant increase in demand. That's going to require huge amounts of capital investments. Capital investments mean higher rates for customers, so we're very, very concerned.
The sale of AES is expected to close late this year or early in 2027. In Indianapolis, Rich Nye, 13 News.